Good morning, everyone, and welcome to the weekend update. And it's been just a brutal week again in the small cap, micro cap sector. What really makes it tough when we have these kinds of retraces in small caps is when you see the large caps continue to make all-time highs, and you're going, well, what's going on? Why are my stocks all in the basement when I keep seeing the major indices hit all-time highs? And, as I've been saying, it's on the backs of a handful of stocks in this low volume, dead, late summer market. But no matter what the story is, it's very frustrating when you see it. We're looking here at the Dow 1 hour chart, and you can see over the last week or so, it's just been a solid march higher here on the Dow. And the real driver of that, of course, has been Apple, which since it announced its split, we went from 355 to 515 over the course of 3 weeks. 1,000 points this year is all attributable to Apple, which with Tesla is splitting tomorrow, and that may have an impact on the Dow weighting. Now they're trying to do, of course, what they always do, manipulate the Dow, and when they've got something that's going to end up hurting it, they bring in something that's going to help it, and that, of course, is CRM. That's Salesforce.com. They're going to be one of the stocks replacing Exxon and some of those others that were booted out to kind of help with the price action. Right before this stock got announced it was being added, it was sitting around 210, and there you go, up $60. Just like that, 25% market cap increase. That's where we are sitting right now. If we look at the daily chart here, it's just been a relentless climb higher on the Dow. All-time highs. Despite the fact that the unemployment numbers are starting to tick up again, we've got no stimulus out there. Only 5 or 6 states are actually giving $300 in benefits. We're seeing data out there that retail sales are starting to go down the crapper again, but the market don't care because it is only a handful of stocks doing that. Now, one thing to note here on the Dow daily chart, the last time, you can see right here, RSI is peaked above the 70 level. The last time we had that happen was back in May into early June, where we had that big whipsaw action down over the course of a couple of days. We had about a 3,000 point drop there when we got RSI up this high. This is typically a very slow week, and slow weeks, if they bring surprising news, can smack the crap out of stocks. So it's going to be interesting to see what the split on Apple is going to do to the market, if it's going to do anything, or if they're going to continue to prop the large caps up at the expense of the small caps. If we go back and look at the size, here's the QQQ chart. Look at this, just relentless climb up. If we look at the market cap increase and the amount of money pulled out of the market, just from 7 tech stocks that are really leading this market, we're talking tens of billions of dollars of money that has just disappeared from the rest of the market. And that's what we see right now. We had a couple of things come to pass at the same time. We had a lot of earnings reports for these small companies. We had that Russian vaccine cure pop up, and then we had the large caps just blow up, a handful of large caps. All happened at the same time in a period that tends to be very slow for the majority of stocks in the market. A lot of guys go on vacation this time of year. Liquidity always dries up, always has this time of the year, and all these things just ran up and happened at the same time. And that's why when we're going over some charts today, you're going to see some utter decimation out there. Now, before we move on, this is the put-call ratio. And if you're not familiar with the put-call ratio, what it does is a simple ratio. They take all the puts out there, all the calls out there, and they come up with a ratio. A number 1 is neutral. 1 means the market is neutral. Under 1 means it's very bullish, meaning they're buying a lot of calls. Everyone is bullish on the market. And above 1, very bearish. Readings down here in the 60 to 70 level tells you the market is frothy. When you see it up at 135 plus, that is a bottom. Right now, you can just see the trend over the last couple of months has been straight down. Actually, aside from that pop we had when the market tanked in August or March, straight down we've gone. So this is just another indication that things could turn nasty all of a sudden. Now, I'm not saying they are going to. It'd be nice if they did, but volatility has disappeared. And if this last couple of week period has taught you anything, you'll remember I said we need large caps to be red and dropping. We need volatility for the rest of the market to wake up. When you see this slow, relentless grind higher in a handful of stocks, the market goes to sleep. Volatility is our friend in the kinds of stocks that we play. There is none right now. There's going to be a link. 3 weeks ago, I posted a video, how to trade markets like this. It's one of the least viewed videos I've actually put out there, even though it's got lots of little nuggets that would have helped everyone over the last couple of weeks, because most guys, don't want to learn how to fish. They just want the fish thrown on their plate. But I'm going to put a link at the bottom of this video for you guys to go review it. Remember, a couple of weeks ago, we went half position. We raised cash, and I said, we're not playing these stocks big. This is a dead period of the market every single year. This ended up being a lot worse than it was. Now, midweek, I ended up selling 75% of my position in all the COVID stocks, even though I absolutely loved them. Now, I have been saying all year, and it has been correct, that this is the best swing market we have seen in my 20 plus years of trading. But everything comes to an end or pauses, and that's what we see. Now, when I said that I was going down to 1/4 positions in my COVID stocks, the reason was we were starting to see a lot of stocks posting news and selling off on that news. You recall me saying we're waiting for news on a lot of our stocks, but maybe we don't want to get that news right now in this period. What prompted me to finally go, okay, it's time to step aside on these COVIDs was AKER. Now, this is AKER's chart right here. It had sold off ahead of earnings, ahead of that data we expected on its COVID drug. It bottomed. It held the 200-day moving average, started to bounce, and then this day, the news came out. It was actually $5 pre-market on Thursday with that news, and then just got whooped. Look how much. On good news, this stock has lost 50% of its value. That meant we need to step aside right now, reduce the exposure, and that's exactly what we did. Now, this one is on my ban list. This is too many times that this stock has actually acted like this. Did the same crapola back in April. Fool me once, shame on me. Fool me twice, off to the ban list you go. But this was a prompting for me to move to the sideline on this market. So let's jump into some stock plays. INUV. You're going to see this pattern on all these stocks, just down, 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 down over the last 3 weeks. As the market's made new highs, that money has gotten sucked out of these small caps. Now, I left the trend line in place here. I actually have another chart here. This is the daily chart, and you can see the stock is actually holding very nice support here at the 200-day moving average. We are deeply oversold here on all the indicators. Now, one thing to keep in mind, if you go back and look at some of these 1 hour or 1 year charts, 9-month charts, many of these stocks are more oversold now with the market making new highs than they were at the March lows. So it is an extreme pessimistic market out there, but there's a lot of liquidity that has left. So this one looks very bottom. The 20-day exponential is up here at 50 cents. So that's a 25% bounce we're probably looking at near term on this deeply oversold stock. News would be helpful, but again, it's like, do we want news, or would we rather have news when these stocks are a little bit higher? VTGN, I love the story on this. Mental health is a big issue with this stock. Like everything else, got whooped on much lower volume than it ran up. We talked about this in the last video. Deeply oversold again, like many stocks. Hopefully this past week saw a bottom go in place. Now, where would I add back some of the shares that I sold? When I go to a high cash stance, and I went from being one of my lowest cash positions and swings in years to my highest in a year. I'm at 92% cash in the swing, but I'm just stepping aside, getting a new perspective on things. Where would I start moving back into this stock? Probably on a break of 75 to 77 cents. Again, I'm a trader. If the story or the stock tells me to get out and watch for a bit, I'm going to do that. And I don't mind adding back higher if that's the case, if the story gets better or the chart gets better. ADMP straight down despite getting excellent news over the last few days, but it is also deeply oversold on all the indicators. Now, just like overbought, oversold can continue to be oversold. So I'm still watching this one to see when and if I'm going to add more shares to the swing position I have. It is holding its 200-day moving average nicely here. I would like to see it move above 70 to 75 cents before I'd start to maybe consider jumping in. Or if we see some action, some bounces in the other COVIDs, I'm definitely going to be looking to pick back up my shares in this one. IZEA, despite all the TikTok news in here, this one just has gotten very, very heavy. There is a negative bias to a lot of these stocks. The algos are turned on to sell these stocks into volume right now. Before, they were buying anything under the sun. These things happen. They flip the algos back and forth all the time. Right now, we need to break 139 on this chart. We're still waiting for that TikTok news, but this is also an advertising play. So TikTok is just one side benefit of this. Support is a buck. Simple as that on this chart. JAGX, dare I say this one looks bottom. This is the 1 hour chart, but it looks like it's trying to bottom out here on all the indicators. Actually, stochastics are starting to go up. We probably need to break over 45 cents, and then we'd be looking at 60 cents as a bounce target on this one. ARPO has also found a support level. Again, you're seeing the same thing on all these charts. Deeply oversold, but I'm watching them. A month ago, I would have been rushing into all of these stocks and adding swing positions. I'm going to be a little bit more cautious, for lack of a better word, and have no problem adding these ones a little bit higher, maybe over 140 or even 150 on ARPO. I might go back in and start picking those shares up. DSS, we're waiting on news for this one, but it too, the last day or so, actually turned around nicely. You can see here, if we look over to the daily chart on DSS, the last time it dipped out of its trading channel was on an offering back in early July, and then about a week later, it was back up at the top of its trading channel. We probably need to see this one break over 650, but again, it's starting to look like it's bottomed here. All the selling appears to be done. Maybe this upcoming week news will actually do something for these COVIDs, but let's see if it does. All was not bad, though, last week. DXLG on Thursday put out an earnings report that was very, very good. Essentially, they said they have a cash plan to manage themselves for the next year plus, aka no bankruptcy in the forecast. And that's what was actually being priced into this one. During this period, we had a bunch of big retailers go bankrupt, and they threw this one out with all of those other ones saying, well, these guys are probably going to do it too. They said no. Nice little support area here. We had that big pop up to 50 cents on Thursday. We booked that gain in the swing position and then came all the way back down. And this is an excellent add spot, I think. I added this one on Friday into the swing position, and it looks very good for a continuation bounce in the near term. Quick mention on MTNB. This is one we're still waiting on that news. Hasn't sold off as much as the other ones because it hadn't run as much as the other ones. This is one we're waiting for that big break over $1 over this 200-day moving average. We're still holding that position. Where would I add to my swing position? I would probably start adding a big volume day, and a move above 90 is where I would be looking to add to this swing position, just because of the kind of market we're in right now. Last stock I want to mention real quick is WIMI. Just a fantastic chart setup over the last couple of weeks, but no interest out here. And that one thing I want you to look at, check out MACD. We have been waiting for 2 weeks for a MACD cross on this stock. You can see how just every single day it just refuses to go as it slowly gets pushed down. Now, when you see this happen, what has a tendency to happen? This was the action here back in June and July, and then all of a sudden you saw this thing just go from $4 to $29. When you see, or when I've seen in the past, MACD's kind of trend like this, typically a large move is coming. The question is, are you able to hold enough or be in this stock or identify when the large move happens to jump in and chase? Now, right now, this is on the razor's edge of support. It could break 720, flush to 650 before they run it up. So you have to step back and think, am I okay giving it another 50 cents downside, looking for that possibly big move here on the chart? That's where position management is key, and why playing smaller positions in a market like this is ideal. When I said This is a half position market. What I mean by that is if you normally buy 1,000 shares of a stock, a half position market means you buy 500 shares. Simple as that. The other rule, and what was hammering a lot of guys over the last week or so, especially over the last week, but over the last couple of weeks, is overloading on stocks. I've been saying over and over again, the max position you should have in any one stock is 5%. Now, when things started slowing down a couple of weeks ago, I said it was a 2% market. What that means, if your account value is $100,000, the most you should have is $2,000 in one stock, period. Don't be trying to get a house out of a stock trade, especially in a slow period, because what ends up happening, you'll give up all those gains over the last 4 or 5 months. Now, it's been dead right now. The other thing you need to be very, very careful about is after a dead period, don't be trying to overtrade to get back those gains you were used to having. The last couple of days, I've played hardly any stocks. Why? There's no action out there. I'm just going to be patient. Like we were patient on our swings before, right now is a time to be patient on when to actually jump into these stocks. Be patient. The trades will come. If there's no trade there, don't force it, because when you force a trade in a tape like this, it ends up digging you in a hole that makes it very hard to get out of. Now, when you don't overtrade and you sit back when that right opportunity comes, you can make those gains back really, really quickly. So I'm going to put a link. Hopefully you guys will watch it to the other video. It's actually long. It's a webinar I did a bunch of years ago. Doesn't matter the date. The themes and the ideas for managing a market like this remain the same. So the link's going to be at the bottom of this video in the notes. Have an awesome weekend and see you all in the chat room tomorrow. Bye.